Hi, welcome to Market in a Minute. So the Buckeyes kicked some butt against Tennessee. We look good. If they can stay fired up, they might win a national championship this year. So we want to talk about some tactical ideas we have for the early part of 2025. And then Anavex. Boy, they had a good announcement on Monday. Stock gapped up 30%. Well, I think we're 210 days away from a potential approval of a really good Alzheimer's drug in Europe. So the stock market update. So the Federal Reserve did as we expected. They cut by 25 basis points. They pulled out two interest rate cuts for next year. So instead of having four, they're going to have two. And then the stock market fell 3%, almost 3% that day. So it was down a little bit more than what we expected it to do. We thought that the market was pretty much in tune that the Fed's going to reset expectations, but we were nervous going into that. So the analogy that we gave before was like a high growth company cutting their numbers. So whenever that happens, the stock tends to implode. That's what happened to the stock market. So they got the expectations reset, and we think that there's a trend that will occur in that the markets will be more earnings driven rather than PE driven, which should expand out the overall market. But why did the Fed do what they did? Um, Look at these two lines here. So the blue line is the CPI, all items, and you had a jump in the year-over-year CPI the last 2 months. So it was no longer in that downtrend. And then the ex food and energy, so they like to call that, like the core CPI, it just can't break. It can't break through 3%. It's stuck. So the Fed is not seeing the inflation being cut as expected. So they had to recalibrate to a higher level. And we'll see what happens next year. But currently, it puts the market in a position where it's been driven by multiple expansion for 2 years now, really big multiple expansion, not a lot of earnings growth. And so we think we're shifting the focus now to earnings growth. And, and then the market's looking for other ideas. So the market's been driven by 10 stocks, right? 10 stocks comprising right now at 35.4% of the S&P 500. That is a never has never occurred before. So that's such a large part of the overall S&P. Um, it's a really big concern in our mind. We have it so concentrated. So that's not a diversified portfolio. So the market's looking for other things. So it clearly wants to find another stock besides Nvidia. And then Broadcom reported last week, great quarter. They explained their strategy in more detail. They are nibbling at the heels of Nvidia around them. So doing custom chips for the same customers for artificial intelligence. So we think Broadcom is a way to play, maybe a better way to play the AI trend currently, and the market wants to rotate it in that one. AVGO. Um, Apple seems to be it's gone up on nothing. There's no earnings growth. It's going to have a huge year of earnings next year. We just don't see that happening. Big multiple. We think that's probably a source of funds uh, for people wanting to reduce their exposure to some of these mega cap technology stocks and getting into better names. So if you look at the sectors here, you can see technology is going to grow roughly 23% next year. That's the expectation. But we think that it's going to be more than just those, 5 to 10 names that are going to grow. So we can move to other things that may be looking a little more interesting in the technology sector. Healthcare, it's been tough in healthcare. Healthcare is way oversold. Looks like 20% growth next year. That's exciting. So nice to see that expectation. So we think that there's a lot of really interesting ideas in healthcare. Industrials picking up, materials have been so beat up. So names like Dow Chemical, we think they're going to show some growth next year. It can't get any worse. So this is an area that we want to buy some names in, along with healthcare, and then some of the consumer discretionary names. We think there's going to be more M&A in that sector, and then consumer staples. Lots of probably consolidation happening in that part of the overall markets, and they'll see growth along with energy. They'll probably see some minor growth next year as well, but about all the sectors of the market are expecting growth next year, and some of those sectors are really pounded, really beat up, and provides an opportunity to get some rotation going in those other groups. Remember, what generally happens is the best performing group one year tends to be the worst performing the next, and the worst performing group tends to be the best the next year. So we'll see what happens when the calendar changes, and looking at some tactical moves for 2025. So we think come first of the year, you're going to see those names that did really well last year. People have been waiting to sell those so they can defer the tax to the following year. So we think we're going to see a fair amount of selling in early 2025. That may put some pressure on the markets. Remember, as January goes, so goes the market. So we're kind of watching that, see how significant that is in January. But also, the Consumer Electronics Show is in early January. NVIDIA will be there talking about their plans and their demand, probably. So we think that's an important data point. And then the most important healthcare conference of the year. Um, it, it, so many people that are focused on healthcare, companies and investors, bankers, you name it, will be in San Francisco that second week of January, the 13th through the 16th. And, a lot of interesting things are announced there. Um, Data points, data will be announced there. M&A will be announced there. So new technologies. We think that the M&A in the healthcare space, particularly biotech, is going to explode in 2025. We think it's going to be a huge year. The Trump policies will kick in probably at the end of January or closely thereafter. That's a big positive for domestic companies. So we want to play the small and mid cap stocks based on that. And anything that's focused on just the US will have an edge next year. Many cross currents are going to come. If the market was spooked by the Federal Reserve taking away two interest rate cuts next year, these things are obvious in our mind. But the Biden spending binge is going to get shut off, and you might see some of that money getting clawed back, and then Doge is going to kick in. So what you might see is the Biden spending come down in a big way, and the Doge cuts to come in and cut a lot of that fat and base spending of the federal government. So you may see two hits to the federal spending next year, which may make investors think that we might be going into a recession. Things are really bad as the economy slows down because of all this spending going away and additional spending cuts. So we think next year there's going to be an opportunity to buy the 10-year Treasury. So we want to buy that around a 5% interest rate, like it did earlier this year. Around 5%, there's good value in that 10-year Treasury and a good opportunity to make money in bonds. Otherwise, stick with the baby bonds yielding 8%. Iran is going to get shut down. I say that with so much confidence. It's like knowing that Ohio State is going to beat Tennessee, right? Say with a lot of confidence that Iran is going to just get sealed off. And so, in a short-term basis, that's going to be, good for energy stocks. And also, we think what Trump's going to do is export a lot of liquid natural gas. So that's good for the pipeline companies and just energy in general. And then what we hear around the street is that the bankers and lawyers are really busy, smiling from one ear to the next about the potential for M&A. And our favorite stock in the consumer space in the staples is Hershey. We think Hershey, that the trust controls the company, and the trust is going to have to do what's in the best for the uh, for the trust members. So we think that that is a likely takeover candidate with another chocolate or candy company next year, and there's a lot of upside. The stocks it spiked uh, last couple of weeks. It spiked up on those rumors, came right back down. We think those rumors are real. And then lastly, Intel needs to be restructured. This is the hard thing to play. I mean, it's been such a bad company recently. It's hard to actually put some money in there with any confidence. But they own Altera. Altera is a good company. That was a really good company that they acquired many years ago. And there's other things in Intel that are really exciting. So it needs to be, sold off like what GE did. The technicals. So, the S&P obviously broke the 20 and the 50-day moving averages last week with that 3% sell-off, and then it's popped back above the 50-day. So when the markets break that 50-day moving averages, it concerns us. So the fact that it's back above it again makes us less worried. However, we have to see this, maintain that 50-day moving average. Otherwise, the other moving averages are at risk of the market coming down to them. We've seen this a couple times this year. Broke here, broke the 50-day here, once again here, and each time it bounced back. So you had three times of breaking the 50-day until this time. So four times last year, broke the 50-day moving average. What we're concerned about next year is it may very well break a lot further than the 50-day. We may have a real correction next year, and maybe it comes back down to roughly the 200-day moving average. We're looking for an opportunity to really own the Russell 2000. Now we've had some good trading opportunities here um, several times. We had these good trading opportunities, and the amount of pullback really is really significant when it pulls back. So right now, with that pullback last week, got a little bit of a sell signal going on here. It went right through the 50-day like butter in the 20-day, and then now below the 100-day. So we're looking for a spot. We'd love to buy it below that 200-day and really own it for the play into 2025. Now, biotechnology, Anavex. So we mentioned this. Um, we've been all over this stock. We think when we saw that data earlier this year, we were really interested in what was going on with this company. We bought it. We bought it well, and the stock's been doing very nicely. They have that phase 3 data for Alzheimer's. The data's good. They filed for approval in Europe. Um, there's 7 million people in Europe that have Alzheimer's. The Europeans don't like the Biogen and Lilly drugs. There's too much side effects. They're too expensive. They really like. We're told that the EMA in Europe likes this one because of the fact that it's oral, very, very, very little side effects to it. Um, be much easier, cheaper way of having a really good drug on the market. So we think after they get going on the European approval, they'll come to the U.S. and seek approval here as well. So the EMA has 210 days to review that drug. So it'll be sometime in July, likely approval for that. If it gets approved, we think there's huge upside. So they presented data at the JP Morgan conference. So there's going to be hundreds and hundreds of people seeing this data maybe for the first time. So we think that's going to be another lift for the stock. And JP Morgan conference has a way of really getting things going. So lots of people there, lots of investors looking for new ideas. So this could be a nice catalyst again for AVXL. In terms of upside, so we've seen when Lilly or Biogen reported good data on their Alzheimer's drugs, at times you get these one-day moves in the stock on these reports of about $20 billion. AVXL trades for about $1 billion. So is there 20 times upside? Maybe. Is there 5 to 10? I could easily see 5 happening and 10, on some sort of really, big buyout, could you could reach a $10 billion market cap in a reasonable period of time. So this looks like a really interesting stock. So we've got a lot of really interesting stocks for next year. Lots of good stocks in the biotechnology space, but in other areas of the market, not just technology, in other areas of the market as well. So we're looking forward to next year. It's going to be a tricky year, so you got to be on your toes. Merry Christmas to everybody. We hope you enjoyed the videos this year. Give me a like, would you? And I don't know what that means exactly, but I know everybody says that. So give me a like and look forward to talking to you next year. Take care.